Welcome to the Inspire to Invest podcast, where we're sharing inspiring stories from business owners, entrepreneurs, and real estate investors on the pursuit of wealth and financial freedom. This episode of the Inspire to Invest podcast has been brought to you by Capital Connectors. Hey, everybody. Welcome to Inspire to Invest. I have Darius Ross with us today from New York City. He's the ultimate guerrilla hustler, striving and thriving from inner city hardship to creating a lifestyle of entering the top 1% of Black American wealth through understanding and applying the street techniques and corporate American nuances to build his own mini empire. So with that being said, how are you today, Darius?
I'm doing pretty good. About you, Serena? Great. Fantastic.
So it's nice to meet you. So maybe you can just take us back to the beginning and talk a little bit about your journey and where you started on this path towards building your own empire.
My journey basically started in Chicago, growing up in the inner city during the 70s and 80s. And basically, real estate became a issue of creating from being fired. So sometimes from being fired creates your fire, so to speak.
Yeah. Yeah. Okay, so maybe
Um,
you can dive into that a little bit more. So, is your primary focus then real estate investing? Are you focusing on a real estate with regards to fix and flips? Like, what's your primary strategy been to build this kind of wealth?
Mine began with the process of, if I want to call it rehab, the hard way. I ended
Yeah,
up buying two or three properties that were in Galesburg, Illinois for basically $100 when they had the
yeah,
assumable clauses where you could just assume them. And I ended up with a bunch of properties that were one leg of a kickstand, if you want to call it that. Everything was wrong.
yeah,
So
yeah.
I learned rehab the hard way. So that's kind of how it all began. Basically, $100 in assumptions and learning
Wow.
the law of assumption.
Yeah. So, can you talk about what the value of the real estate would have been back then, and then what you were putting into those homes and what they were selling for in terms of, building that building that process and just building your portfolio essentially?
Basically, what happened was that once I got into that part of it, I ended up losing those buildings, interestingly enough. Because sometimes when you actually garner the opportunity to get in real estate, you start thinking about all the things that you can buy. And I learned the early lesson of don't buy before you actually have the investment income. So basically, from that perspective, you go out and you start looking at buying all these materials and so forth, but you overestimate, you underestimate, you're not prepared for the various contractors and so forth, so you can get screwed. So
Yeah.
basically, if I looked at it now, those probably worth two or $300,000 a piece. But
Yeah.
at the time, they were basically $10,000, $12,000. The
Yeah.
market was different.
Yeah, I mean, even for where I live, like the market's actually insane. Like
Mm-hmm.
it's
Mm-hmm.
stabilizing now, like it has come down a lot, but I mean, townhouses were like 1.2 million, and even some fixer-uppers were still closer to that $1 million range. Like I would say even condos, the condo market's a little frozen right now, maybe around 500,000, but it's a very difficult thing to find properties that you can rehab appropriately. And I think the risk that's associated sometimes is that you can go in, obviously you run your numbers, you think things will be a certain way, but the real estate market is also cyclical, right? So you could kind of come in at the high end and then all of a sudden the market turns and that pretty much strips away any potential profits or even maybe puts you in a loss position depending on where that stands.
I think one of the biggest things of it is I said in a real estate investor, do not fall in love with the property. See, so often we go in these things thinking, oh, okay, I'm going to beautify and make it all these things. It's cookie cutter,
Yeah.
basic kitchen, Home Depot, basic bathroom, basic everything. Do not go in there thinking that you're going to go in there and just make this thing the Taj Mahal and then find out it doesn't make sense because nobody wants what you did because they're
Yeah.
not looking at it through your vision.
Yeah, yeah, no, absolutely. And I think sometimes there's value to just finding properties that need the lipstick renovations and,
Mm-hmm.
even just things that I've seen sometimes people won't buy a property just because it's something simple, like maybe the stove isn't nice or there's paint on the carpet or something
Mm-hmm.
like that. And those are very small, small things to spend money on, but they're willing to spend another 100 to 150,000 for something that's 100% turnkey. And I'm like, I think sometimes you really have to look at something, evaluate
Mm-hmm.
it based on its
Yeah.
bones and really look at it not for what it is, but for what it could be. Right. So I think from an investor lens, you want to factor in a lot of those different things, but that's definitely part of it. So you talked about taking losses kind of early on into your career as a real estate investor. Where did you kind of pick up then? Because, if you are having these losses early on, like how do you turn that around?
You first of all realize that you're your own worst enemy. That's the key to a lot of real estate investors. They don't understand, they get disillusioned because they go, okay, I've lost out on the property. But you have to look back on it and say, okay, what did you do wrong?
Yeah.
And one number one things that I found out is once you realize you're your own worst enemy, you start realizing, okay, Is it the fact that I don't know how to budget? Is it the fact that I don't have the right team? Is it the fact that I picked the property wrong? Is it the
Yeah.
fact that I just didn't get this because
Yeah.
I didn't do my research? And the research is very basic and simple. Real estate is a business. It is not something to say, okay, I'm going to go in here, get this property, I'm going to flip it for $2 million and voila. It doesn't work that way.
Yeah.
That's what so many people lose out.
Yeah, and I mean, I've seen the same thing in our communities. Like, there's actually been a number of operators that have gone bankrupt, and there's like a lot of significant things that have happened. And in our world, it was like, OPM is kind of this perfect marriage of the money
Mm-hmm.
partner and the working partner. But then the problem is the working partners were actually didn't know what they were doing. They weren't
Mm-hmm.
focused on the business of real estate, and they lacked
Mm-hmm.
some of the fundamental things that really are required. And they built up these, like, in some cases, very significant portfolios that were like $100
Mm-hmm.
million, dollars, like 1,000 doors. And then
Mm-hmm.
now there's been this catastrophe kind of happening, across multiple operators and stuff like that, right? So I think that that's something that needs to be stressed so much more because it's very easy to go from like one property to 10 to 100 or something. And if you lack those fundamentals, everything's just going to fall apart.
The thing that I say that's important for most real estate investors to understand is you're selling this to a tenant. Emphasis on tenant.
Yeah.
So as a result, if you go back to the old days of what the tenements were like, they weren't the best of things, but they were functional. So again, you want to give somebody some place that's livable, functional, will pay the bills, and will maintain for them their lifestyle. And
Yeah.
more importantly speaking, your lifestyle, but not create something that you can't sustain. I mean, even
Yeah.
some of the best real estate investors have made mistakes because they did something that didn't make any sense. You
Yeah.
created something that you didn't realize the lesson of tenement, what it
Yeah.
used to be, and just modernize a little bit better now.
Now, are you still based in Chicago?
No, no, I'm in New York now.
You're in your, oh, sorry, but I knew that from your bio. What I wanted to actually ask was in regards to things like the landlord tenant laws, like were you keeping any of these properties to tenant as well, or were you just flipping them?
No, I was keeping them. I
You
was
were keeping them.
acquiring and keeping.
Okay.
And the thing about the acquiring and keeping again is like learning tenant skills. That's the number one thing.
Yeah.
Property management skills, tenant skills. Realize that again, don't get too cozy, comfortable with the tenants, and more importantly speaking, understand the tenement mindset.
Yeah.
The tenant's mindset is just that they want a comfortable place to stay.
Yeah.
If you add all these features, that's for you. That's not for them.
Yeah. So, can you talk a little bit more about that from the tenant mindset? Because I think that's one of the biggest challenges that any real estate investor will encounter, especially when they are managing the properties themselves. Like, what do you think are some of the right ways to go about it and the wrong ways? And maybe you can shed some light on some of those challenges that you experienced during that course of time that you did have tenanted properties.
I think the biggest thing is maintaining credibility, making sure your staff will stay on point, on target, and will show up and actually do the job. So you need to make sure that you have the Home Depot method, whereas you know that they're going to be there, your workmen are going to show up on time, everything's going to be point blank until the tenant's going
Yeah.
to pay. That's the number one thing. They're not going to pay if the thing isn't fixed, it's not up to par,
Yeah.
garbage is sitting around, feces, and so forth. Second thing of it is within the confines of the apartment basically doing monthly and or semi-annual inspection. So you know it's actually in the property.
Yeah.
If they're tearing the walls down, then here again, before you know it, the local housing department preservation office will be at your door
Yeah.
giving you fines because you didn't turn around and realize that their kid was tearing the walls in. So
Yeah.
you got to
Yeah.
make sure that you understand that.
Yeah.
Last but not least, from the financial perspective, making sure the unit has what it needs. So guess what? Make sure that you actually stock up on the potential things that you need as far as parts, basic parts, the sink, the stoves, on and on. You're not fit to be in the business if you don't understand and maintain a supply of materials. That's
Yeah.
the key that they want, being
Yeah.
able to replace stuff.
So at the height of your portfolio, how many properties were you maintaining at one time?
Total number of doors with partnerships close to 100,000.
Sorry, 200,000?
100,000.
Oh my God. It's like, what? What? So then how did you scale? Like that is obviously very substantial.
It was actually getting more partnerships, partnership after partnership after partnership. And that in itself can be tricky because not everybody is fit to be in the business. And sometimes your partners can be your worst nightmares. I can tell you stories about that.
Yeah.
Sometimes you get in with high net worth individuals and they don't understand the dynamics of, I'm not getting a return on my investment today. Well, guess what? I'm not either. You know what I'm saying? I'm operating as your GP, general partner, but that
Yeah.
doesn't mean as a limited partner that everything is going good. So I take a loss, you take a loss. And being
Yeah.
able to your prospective partners, we're all going to take a loss if this thing goes wrong, particularly speaking during COVID.
Yeah.
People didn't understand that. But one of the things that helped me was that we had continuity insurance, which a lot of people didn't understand to maintain the income
Yeah.
because a lot of tenants stopped paying. Very simple.
Yeah, yeah. Yeah, I mean, obviously that was a really crazy time, and I think it's really important just when you are scaling your portfolio in different areas just to understand, what the lay of the land is like when it comes to landlord tenant laws and stuff like that. But on that note, we're just going to take a really brief break for a word from our sponsors, and we'll be right back.
Big ideas require big capital. And behind every empire you admire out there is someone who's mastered the art of raising it. Elon Musk, he's raised over $75 billion. Warren Buffett, he's built his empire by attracting capital from others. And every real estate tycoon you know of, their portfolio didn't grow from their savings. They scaled by raising capital. So if you're building something that matters, your ability to raise capital is not optional. It's literally the difference between slow growth and true scale. The challenge you're going to have, though, is you haven't built the systems, the story, or the structure that investors trust. Capital doesn't go to the person with the best idea. It goes to the person whose business is actually ready for it. So pick your stage, own it, build what your business needs at that stage to be able to attract the level of capital that you need where you're at today, not where you think you want to be tomorrow. If you do all of that, capital will follow. So the question is, what stage are you in, and what's the next thing that you need to do to grow your business? Click the link below to schedule your capital raising session. We're going to go ahead and map out your custom blueprint and show you exactly how to implement this system in your business. Now remember, if you don't raise the capital, you don't pay. Click on the link below to schedule your strategy session now.
Thanks again for following along with this episode of Inspired to Invest. In addition to real estate, investing, and running my own brand experience agency for 18 years, I also published a book called The Accidental Entrepreneur in October of 2021. This is my story, and it chronicles how I turned tragedy into triumph to embrace my destiny in entrepreneurship. If you're interested in picking up a copy, you can find the link at serenahomesrealtor.com, and you can also find my link tree with all of the retailers in the details below. Thanks again for your support. Inspired to Invest is proudly sponsored by Share, a US-based platform designed to help Canadians and Americans invest in rental properties across the United States completely remotely. With Share, you don't have to deal with tenants, repairs, or trying to figure out unfamiliar markets on your own. They handle the entire process for you, from setting up your US entities to sourcing vetted rental properties in landlord-friendly states to managing everything post-close with professional property management. It's a done-for-you turnkey solution designed to give you all the upside of real estate ownership without the typical landlord headaches. If you've been wanting to diversify into US real estate but didn't know where to start, Share could be just the partner you've been looking for. Hey everybody, welcome back to Inspired to Invest. I've got Darius Ross here from New York City, and he's talking about how he scaled his portfolio and started out really fixing and flipping homes in Chicago and then growing a very significant portfolio with different partners. And one thing that you touched on before the break was just, again, those crazy tenant stories. So I always like to ask my guests, what's the craziest thing that's ever happened to you as a real estate investor?
I had a small property that was about 4 or 5 units, and the gal did not want to leave. I actually bought it from her, and she didn't want to leave. So one morning, I decided, you know what, we're going to get tactical here. This is going to be guerrilla strategy 101. I've got a book about this. So I turned around, moved the U-Haul truck up to the property. I loaded it up, and she's like, "Okay, are you willing to move my stuff?" "Oh yeah, certainly, sure am." So I moved the stuff into a garage where she was staying at. A couple of days later, she called me up. "You B," she just went in on me, right? But again, that's the only way I get her out. I had to move her out at my cost. So
Yeah,
that was one of
yeah,
the storylines that, you have to do what you got to do sometimes. And a lot
yeah.
of times landlords are not prepared to spend the money to solve the problem. And sometimes the problem is just that the tenant won't move because, unfortunately speaking, they don't have the resources. So sometimes you got to help them out.
Yeah. Yeah. I mean, I see that with a lot of investors, especially as they want to turn over properties and stuff. They're offering cash for keys. And sometimes that could be a few thousand. Sometimes it can get up to like 15,000, 20,000. But at least
Mm-hmm.
for us here in Ontario, and I think New York City is fairly the same, is that the tenants have so many rights that literally, like, it can be very, very, very difficult to get them out. And sometimes it's emotional attachment. They're not going to be able to afford other market rents and stuff like
Mm-hmm.
that. Like, people are attached to where they live and stuff like that. So I think it's just something to be extremely mindful of depending on where you decide to invest. Now, in terms of things like advice, obviously you have grown a pretty substantial portfolio. So for somebody that's just starting out, what kind of advice or lessons would you want to pass along to them?
Maintaining your credibility. That was the one thing I found at the very beginning. If you screw the credit up, That's a major issue because nobody trusts you, whether it's limited partners that are doing OPM
Yeah.
and or now expending other people's money process or the bank.
Yeah.
Nobody trusts somebody that actually has already DK'd them, gone deadbeat on them. So that's number one thing.
Yeah.
Second thing of it is treat this as a business. It is a business. Do not fall in love with the real estate. Do not fall in love with the tenants. Do not fall in love with all the trappings of it. Remember one key principle, and I call it best. If you realize the income equals your opportunity for freedom, equals your ability to turn around and participate in the dream. Okay. So you got to
Yeah.
make sure the income's right. So that's number one thing I say to young people, or even people that are just getting into this. Remember, the income comes from making people happy. If I'm not happy, I'm not paying you. Very simple.
Yeah. Yeah. Now, you mentioned as well before the break that you're working with a number of high net worth investors to scale your portfolio. How are you finding and building some of those relationships?
A lot of it comes down to social networks, philanthropy, and so forth. I got involved on the philanthropic side of being able to attend various fundraisers and so forth. And so you're
Yeah.
basically participating from that perspective. And so a lot of those investors are there and they have money that's sitting on the sidelines and you have the ability to turn around and access that because they
Yeah.
really don't know what to do with it and they have no reason to want to turn around and let it go unless you're
Yeah.
really smart and true.
Yeah. What would you say is something that you're most proud of?
I would probably say a small rehab I did myself. It was probably 100 and maybe $40,000 property. That's what it was worth. I got it for like 58 and ended up selling for 150. But I
Yeah.
put about $300,000 into it,
Yeah.
unfortunately. But the wise thing I learned about it was I learned rehab all over again because I had been out of the rehab game for quite some time. And I'm like, you know what? I'm going to do this. So I found out the hard way that you have to be very careful about, again, looking at this as your baby. Do not
Yeah.
make the baby mistake.
Yeah. I mean, obviously, people can become very attached to their different projects and stuff like that. So I can appreciate that. Now, in terms of how real estate investing has changed your life, can you talk about what that looks like in terms of time, money, financial freedom?
It has been the ability to pretty much do anything that you want to do. Whether it's financial, whether it's donating, whether it's creating causes for young people, whether it's participating in team sports or, something like to do ATV, jet skiing, and so forth. And more importantly speaking, the time to turn around and walk away from that rat race. But
Yeah.
this is the one thing I must emphasize. You have to create a team, whether it's your accountant, your lawyers, and most importantly, speaking of back office people. Your
Yeah.
property managers and your back office people are most important. Do not pay them comfortably and do not ignore them because they are the backbone of keeping this thing working because they're there when you're not there.
Yeah. Yeah. No, absolutely. Now, in terms of what's next for you, like, are you at the point where you're still growing? Are you just stabilized? Like, will you eventually get to the point that you are offloading some of the properties?
Actually, no. One of the things that I say, I've got a new book out on TPS where I talk about what's next. And that what's next is that there are continents that, like Asia and Africa, are now going to have billions of people on the continent. So now my thing of it is to hopefully grow to a billion units and look at expanding in those environments because those countries are going to be huge. So one of the things I say is start visiting other countries, particularly speaking in Asia and Africa, because that's the new markets.
Yeah. Yeah. I mean, I think there's a lot to be said about that. And then there's also some people I know that are really heavily engaged in providing seniors homes in different
Mm-hmm.
capacities. Like in one instance, I met a developer that finds the land and they're basically building these seniors homes and then flipping them to a company that acquires them. But the reality is, at least where we are, like over 200,000 beds are needed and only 72,000 were built in the last decade. So there's obviously this very significant need for it. And for us here, it's actually one of the only asset classes that's not rent controlled. So it's kind of crazy. And it's like a very lucrative business. It's needed, but it's also, can be very profitable. And then I know someone else in the United States, it's also doing them more on a boutique scale because he had a bad experience seeing family in like one of the larger institutions.
Mm-hmm.
But
Mm-hmm.
again, it's a very unique model, very profitable, but he's trying to like do good work and give back. And he's just identified again this demographic where, the aging population is coming and it's going to only keep growing, right? So I thought those were some really unique, interesting opportunities.
Well, I'll throw a quick number in there. There are 76 million boomers, and I will be 60 this year. So the boomer market is going to be 76 million just in the States through 2035.
Yeah.
Around the world, that market's going to be close to 2 billion.
Yeah.
So
Yeah.
the single market is going to be huge. I would say just one tail end of that is with subsidized housing. That's another aspect of the senior market because that's where
Yeah.
seniors can't afford to pay, but the government is assisting. So that's a huge market. You're on point.
Yeah. Now I had heard on maybe on social media or something that the US government's getting rid of Section 8 housing. Had you heard anything about that? And what kind of an impact do you think that's going to have?
Un- Unfortunately, we got to take a deep breath on that one. The current administration has been doing some things that are making most of us uncomfortable. But at the end of the day, it's going to be very difficult to eliminate that because there's probably 10, 12 million people that are going to be needing it, and 5 or 6 million now that currently have it. So it's like, how do you put these people on the street per se?
Yeah, yeah.
And if it's Section 8, you just can't. I mean, it's a program that's going to have to continue at least for the next probably 30 years at least.
Yeah, yeah, that's interesting. Now, obviously, the name of this podcast is Inspired to Invest. So I always like to ask my guests if they've got a particular quote that motivates or inspires them.
One of the biggest ones is I always say this: do not be your own worst enemy and stand in your own way. Understand that the most important thing that you can do is understand financial freedom from this aspect. That building represents the difference between you being broke and you being comfortable. And see, everybody defines comfortability differently. But what I say is, if you make that income right, you will never have to work another day in your life. But the income has to be right.
Yeah,
You have to feel it, see it, and really appreciate the fact that you're providing something for someone that, they're working for you, basically. So if they're
yeah.
working for you, appreciate them. Do not treat them as if they're in some type of chattel environment.
Yeah, no, absolutely. Now, for anyone that wants to get in touch to learn more about your opportunities or maybe pick up your book, what's the best way for them to get in touch?
I have two websites. They can reach me at dariusross.com or they can reach me at dariuswrites.com.
Okay, great. Well, thank you for taking time out of your day to be with us today. And for anyone that is watching or listening, if you've enjoyed this episode, make sure that you like, comment, and subscribe, and you followed along on social at Inspired to Invest podcast. And remember, when you invest in yourself, the sky's the limit. Thanks again. Thank you to M1 Capital Connectors for bringing you this episode of Inspired to Invest. The views represented on this podcast are for general information only and does not constitute investment or other professional advice or an offering of securities. The host and guests featured on Inspired to Invest make no representations as to the performance of any particular investment. Should you decide to make an investment, you are responsible for conducting your own review and analysis. It is recommended that you obtain independent legal, accounting, and tax advice from licensed professionals.